Okay, so I think there's a couple of things to mention. One is that the stock market and the economy are very much disconnected in some cases. And I think that comes down to the management styles of the constituents of these stock market indices. But what I see happening is a real bifurcation in terms of how companies are run in the West and how companies are run in the East, as in Asia. And to the extent that we've seen Asian companies go through, let's say, 3 or 4 existential crises over the last 20 years. We had the Asia financial crisis in '97, we had SARS in 2003, we had the GFC in '08, '09. Of course, in Japan, we had Fukushima in 2011. What that has actually meant is that management teams in Asia are much more cautious in terms of the way they run their companies, which means that companies have a lot of savings on the balance sheets, and those savings can get these companies through more difficult times. So I think economies around the world are facing the same issues. Governments can react in similar ways in terms of monetary policy and fiscal policy. But for the stock markets, the behavior of the management teams will determine which companies succeed and which companies have to go back to shareholders and raise some more capital.
Okay, so relatively speaking, it seems to me you're saying look at companies in Asia Pacific that may have been more cautious before this crisis, but still we are talking about an unprecedented health crisis turning into an economic crisis. So there's going to be some damage appearing, certainly we would expect in this earnings season. So just what are you watching out for in terms of how hard the earnings are hit?
Yeah, so earnings is one thing, and ultimately the market just does not know what earnings forecasts are going to be for this year. Now, what we can point to is this morning yesterday rather, we had results out from Samsung Electronics. We had some guidance from SMIC in Hong Kong. We also had some data from UMC in Taipei. And what these companies are saying is that they are optimistic or cautiously optimistic about the second half. They've got balance sheets which can sustain capex increases. Now, I guess if we turn to companies in the West, like the US or the UK, balance sheets there are strained because companies have been using cheap money to buy back shares at the expense of the balance sheet. And what that means is these companies are going to be forced into cutting capex, cutting dividends, and their ability to A, service the shareholder register, and B, service the growth of their companies. So I think if you're a global equities investor, and you have a mandate to be invested in global equities, then Asia is the place to be right now.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.